Good morning, everyone, and welcome back to the channel. I hope all of you are enjoying your weekend. I know weekends for stock traders will be very boring, but for crypto, the price action never stops. Today, we'll be looking at sand. I have no idea what sand is, and I have no idea what it does, but I know one thing. I do like the way that the price action is moving. So let's begin, as always, with the weekly time frame. So as I said, it's very, very bullish. I really like the way it's moving right now because, as you can see, this is higher high. Well, I mean, previously it's higher high, but more importantly, higher low, right? We held support right here. 1 second. Let me actually delete these, just so it's easier to see. So higher low here, but then on a bigger scale also a higher low. So that is very bullish. Macro wave 1 here, what we would have here as a 1, 2, 3, 4, 5, extremely bullish. And then what we would have is a wave 3 in this macro scale, which would, obviously it's very bullish as it'll go up and away to $212. But again, that's in a very, very big macro scale, so things can change. We'll see how it goes. I'm not saying that it's gonna hit this level like soon, as in like the next couple months, as in like this bull run. I have no idea. Let's just look at a smaller time frame, because again, this is on a macro scale. This is on a very macro scale. So instead of looking at it like that, let's look at what we have now, the smaller degree. As you can see here, I have it marked, and it's this smaller degree. Actually, wait, not that one. This one is the one I'm talking about. The smaller degree 1 is already incredibly bullish right here, right? This 1 very impulsive, and then we complete 2 down here in April. Like all the other altcoins, April is a really strong date for a support, as almost all the altcoins ended up having making their higher lows on the first week of April. And as you can see, very bullish, because we have it started at what, 0.208, and making its way up is a 411%, all the way up to a high of 1.068. That is incredible. Now, one thing before we continue, me personally, I know that, so these, if you're trying to learn Elliott wave theory, just realize that the degree that I have when I'm counting these waves, this is entirely wrong. Like I don't know if I know that there are actually, let me show you. There are different degrees here, which is minute, or I mean minute, minor, intermediate. There's so many of this, right? And I know there is technically like a certain degree for certain time frames, but the way that I would usually do it personally myself is that the wave that I am personally tracking, I'll always do it as minute. The reason for that is just because it's a different it's the Roman numerals, right? It's the I, and then I, and then I. So 1, 2, 3, 4, 5. And what I usually do for something that is on a bigger scale, I would have it as 3, 4, 5. Okay, what I would usually have it as is actually primary is what I would like to track on a very, very large cycle. So either the weekly or the monthly is what I like to track with this degree, the primary degree. Intermediate is usually what I track like within the larger degree. Minor, this one, which is just a 1, 2, 3, 4, 5, is just something I would track like for instance, I would track this here as 1, 2, 3, 4, 5 because the degree lower, 1 degree lower, is actually what I have for this. It would be the minute one, which is the same as this. And I like to track the daily movements or even the hourly movements with this degree. So I would usually have 1 degree bigger as the minor. But yeah, if you're starting out, you know, I don't know if there is you know, certain way you're supposed to use it, but just a heads up, if you see that this is, oh, why are you using this one, why, like, this is incorrect or whatever, I don't really care. It's just the way that I like to do it. So aside from that, let's get back to where we are right now, and in fact let's go into the daily frame, daily time frame. Look, what do we have here again? Oh, before we continue, please like, share, and subscribe, as it means the world to me. I just started, and seeing people watch me ramble about technical analysis is quite heartwarming for me. So please do that, please. So on the daily, there's a very big move, especially in wave 3. So let me show you this. On a smaller degree here, right? If we had this, you know, this 1 into a 2 and a 3 and a 4, 5. So what we have here is that if I show you the smaller degree for this, you can see that this ended up being a 1, 2, 3, 4, 5, and the wave 3 here is incredibly bullish. A 3.236 extension, right? From a 1, 2, and then 3. 3 is incredibly strong, incredibly bullish here. And then 4 and a 5, ending at exactly the 4 level, right? But we can see that wave 3 was incredibly bullish. In itself, within this wave 3 ended up being a 291% up, like 291% up. And that's just wave 3 by itself. And the entirety of this is, what is it, a 408% gain, right? But what we can glean from this is that these waves up, these moves up, are very explosive. They're extremely explosive. But if we were to look at this, you know, the downtrend, it's 125, or like roughly 125 bars, right? 125 days of a downtrend. So it is a very slow and drawn out. These moves down here, very slow, but moves up extremely fast, extremely bullish. Now, of course, this is on a bigger degree, and what I want to look at is actually what we have here. What I am tracking right now, as wave 1 and 2 is complete, and we are on wave 3 right now, as shown here. And if you watch my other videos on altcoins, you'll see a common theme that they're also on a wave 3 move. And we know that wave 3 for this coin can be very aggressive. Very aggressive, right? Even like as shown before, it's very extreme when it moves. Now, drawing this Fibonacci extension from this smaller, on what I'm tracking right now, like I have it set as a 1.618, the golden ratio. So I am anticipating a move that goes at least to this level. And we know that, you know, if, well, I know that usually when there's a move that goes to a 1.618, it will usually retrace back to a 1 level. That's just like very common. And if that is what happens, I would expect, you know, wave 5 to run up to maybe around like 2.618 level. But but keep in mind that this is very conservative. Like this wave count is very conservative, and in fact it's more than not, it's more likely incorrect, as we see that this wave 1 is already if it was following the same level, following the same move, we would see that wave 3 is nearly the same as a wave 1, which, I mean, it's still valid, but like the likelihood of it being, you know, exactly like this, where it's practically the same as the original wave 1, it's quite unlikely. It's quite unlikely. So basically what I'm saying is that the count that I have here, right, that I'm also tracking right now, anticipating a move to a 1.618 is very conservative, is extremely conservative. And like I mentioned before, the wave 3 that we had before running here was extremely explosive, up to a 3.236, right? So if it were to rhyme to like previously, we would be seeing a much higher level. It would break, assuming that, you know, it does have the same explosive wave 3, it would break much higher to the higher side. So again, this is a very likely level, but it doesn't have to stop there. It can easily just go right past it and have a sub wave 3 on this previous one wave. So yeah, just bear that in mind. So I am keeping it simple, and this, what I have here, this is kind of what I am anticipating as of right now. Now, going into the smaller time frame, you know, the hourly time frame, we can count the subwaves. So, and what I mean is counting the smaller subwave of this wave 3 move, because we know that this already completed a 1-2, and with a higher low than this, right? So we already know it's gonna be no, sorry, we already know that wave 2 is done, right? Because we already hit this. It held support, really strong support, and it's just going back up as of late. And I just drew this parallel line because I just want to actually confirm something as we go, but that's just ignore this for now. It's kind of something else right now. I guess like if it comes to relevancy, then I'll bring it up. Otherwise, you know, just ignore it for now. Now, if we count this subwave, we can see that this is a 1, right? 1 into a 2, and 2 is presumably finished now. 1, 2, and then again subwave 3 of 3. So subwave of 3, because 1, 2, 3 of a 3, of a bigger 3 here. Now, I haven't been tracking this recently because I do know this is incredibly bullish, but I did just see something that I do want to share, and that is if we're counting a smaller degree, right? So we're talking about even a smaller degree. So 1, 2, 3, 4, 5. This smaller degree, let's just make it clear. Oh yeah, this one's fine. Okay, this here, this smaller degree. So as we can see from this wave 1 is a very typical wave 1 into a 2. Now let me just show this. 2. Now you can see that 1, 2, 3 has, well, I mean close enough. 3 has hit this golden level of 1.618, this golden ratio. And wave 5 here ended up being a bit over this 2.618, which is fine. But more importantly, what we see here is an ending diagonal here. Now, let me show you what I mean. Like this, I know we've been talking a lot about leading diagonals, because lately there's been a lot of those. But this ending diagonal here, it has the same characteristics as, you know, a leading diagonal. But if you take a look at this, right? Okay, let's not go there. This one, trend line here. And trend line here. Ending diagonal. So take a look at the trend line, right? It's smaller. It's like a wedge, but it is making higher highs and higher lows. And not only that, but there's a lot of overlap, just like how a leading diagonal would have a lot of overlap. So we'd have a 1, 2, 3, 4, and 5, but all these are overlapping, and this is overlapping as well. And more importantly, we have wave 2, right? So if I were to draw this out on an even smaller degree, 5, even smaller degree, right? You can see that this wave 1, 2, 3, 4, 5. Now waves 2, this wave, and wave 4 is a very clear zigzag, right? A, B, C, A, B, C. Like these, very clear. And even so, you can argue, like, you know how in a leading diagonal it's usually 5, 3, 5, 3, 5, or 3, 3, 3, 3, 3. Now in this, it's exactly the same principle. You can say that there's a ABC somewhere, ABC, something like that. ABC, that's a 3, ABC, or you can even say 1, 2, 3, 4, 5, whatever. And then ABC, ABC. So the thing is, for me, usually for diagonals, there's always some kind of gray area between, you know, is it a 5 or is it a 3 in the impulsive waves? So that is usually what I use to define a diagonal, because that is usually for me personally, that's one of the strongest indications of a leading diagonal. You know, other than, you know, it being moving in one direction, whether it's, you know, lower low or higher high. And even aside from that, we can see that wave 1 starts off with very extreme and strong volume, and then we see the volume just tends to wane down as each wave progresses up, right? So we see that wave 3, we see that wave 3 has significantly less volume, and then wave 5 even has even less, right? So it basically shows that momentum is not there, and it's making it difficult to make stronger highs, right? Because if the volume was there, the next high wouldn't just be, you know, here. It'd be, if there was enough volume, you're likely to see it more impulsive, much higher. And like all diagonals, we would come back to a strong retracement level. Like as I mentioned like countless times, the retracement for diagonals would be very, very steep and very, very strong. So let me just remove this and this and this, and let me show you. Retracement, right? Because this is the ending diagonal here, right? We can go from the beginning of it, the beginning, into the top. And as I mentioned so many times, a diagonal would retrace back down to, what was it? 78.60% and 88.60%. And what do we have here? It literally touched the very, very, you know, level of 88.60%. So let me just be clear, because this diagonal that we're counting here, is only in the subwave of 5, right? This fifth wave, as a 1, 2, 3, 4, 5 that I just removed, because this is of a smaller degree. When we look at the retracement, we don't have to like okay. Let me show you what I mean. This huge retracement would be the entirety of the retracement of the entirety of this entire move that we have here, right? But in a smaller degree that we're looking at, because this is only one sub-degree, right? 1, 2, 3, 4, 5, we can just look at the following retracement level, which we would see at 88.60%. But if we were to look at the entire move retracement, which would be this entire thing, right? It would correspond with this entire ABC correction. And let me show you what I mean. If we did the entirety of this retracement, you can see that this actually still hit a Fibonacci level here at 70.70%. So again, this entire move here retraced back to 70.7%. But in a smaller degree, we can see that there was a retracement of 88.60%. And like I just want to show this because I want to provide like the evidence that Elliott wave and Fibonacci levels really work. They really do. Like, I know that the daily chart moves are very slow, and waiting for things to happen, it really feels like forever, right? Because right now I'm on a 3-hour chart, and that's how I can show this movement. On the daily, it'll be a lot slower. In this hourly chart, it is more than proven that Elliott wave theory has substance in it, right? Like, I just showed you all this, like, retracement level and the wave count and everything. It has substance to it. It's not just random gibberish. So for those who think Elliott wave theory is like horoscopes, like, I was also in your shoes when until I started to seriously learn about it and begin actually applying to it. So like, what I believe is that in the end, Elliott wave theory is really just mass psychology and sentiment. Now, for instance, ending diagonals, why does it drop so hard in a retracement? Well, because buyers keep buying at whatever price, right? They're trying to push it up, but the buying pressure is too low. They realize they aren't making a dent in the price, so once they stop buying, all the sellers will step in, and next thing you know, the pullback is deep, right? Again, it was like 28.95% this move, but we had an 88.6% retracement all the way back down near the very beginning of the move. And now think about leading diagonals, right? And think about why is it usually followed up by a really strong and extended wave 3, like usual. I mean, like, I don't have the leading diagonal on this chart unless I can find it somewhere, but you know what? The video, the one that I was doing earlier, does have a leading diagonal. So this, right? This was a leading diagonal. This is Algren, by the way. This leading diagonal. So why? Okay, it hasn't happened yet, but follow with me, okay? Why do leading diagonals, like, why? Think about why is it usually followed up by a strong extended wave 3? Like usual, the buyers will try to make a new high, right? They'll try and make a new high, but again, their efforts are in vain, right? And like they can't push it to a higher level. There's just not enough buying pressure. And then again, wave 2 will retrace like crazy. It'll just come crashing down. However, there is strong support near or around the beginning of wave 3. So when wave 2 ends, right, they realize, oh, we can't really push it back down to the very original low. So many traders will see that there is strong support. It won't be going down as everyone is holding or just buying near the previous low, right? And the sellers no longer have the downward pressure. There's no more ammo for them, and everything now flips to the bullish side once it breaks the level of the wave 1 diagonal, right? So let's assume it comes down from here. It begins here, ends here, and it comes down here. Buyers buy. They can't really make a dent after this, right? And then sellers will step in, sell, whatever, make their profits, whatever, short sell it, whatever it is that they want to do. They sell, and then they do everything they can, but for some reason, oh no, we can't, what do you call it? We can't push it back down to the original low. We can't do anything about that. So it holds at whatever level, maybe 88.60%, right? Percent retracement. So now the sellers have no more downward pressure, and then everything flips to a bullish side, because once it breaks the level of the wave 1 diagonal, more traders will see a break of resistance, right? Because again, like, if you look previously at whatever price there is, you can just say, oh, there is resistance, right? There's resistance here. Because, oh, it touched here like 2 times. Oh, there's a lot of touching here. It couldn't break it. Okay. Can't break it, bearish. But the moment it breaks this resistance level, it's also like, oh, it's also, you can say, you know, oh, we have this trend line. somewhere, something like that, right? We have this. It's also a break of trend line too, breaks through this, and also it breaks a previous high, right? Because the previous high, assuming that it keeps correcting, and then we have a continuation, a reversal into a wave 3. When it breaks this, it's like, okay, it breaks the resistance, breaks the trend line. Oh, it's a break of a previous high, which is this one, right? And then all signs will show that it's bullish, and that's when we have the breakout with an extended 3. So again, traders don't really use the Elliott wave theory. Like, obviously there are different ways of like skinning a cat. There's different ways to skin a cat. So you can say, if they don't know anything about the Elliott wave theory, you can still trade. Of course, there's a lot of successful traders like that, but I'm showing that Elliott wave theory will actually predict what is going to happen. It can kind of pave the way for you. It is just mass psychology, because again, traders who don't follow that, they will see that this is a resistance line. It tried breaking it 3 times, but it can't. And then who knows, maybe we have a smaller degree 1 that, you know, goes up here and then gets resisted again. But the moment that it breaks this resistance line, that's when you know that, oh, there's going to be a strong move up. All the other traders will see that, oh, it broke all of this, everything's bullish now, time to step in. Now, back to sand. Okay, where are we right now? We just completed a smaller degree wave. 1 second. So, where are we right now? So this is you know, 1 2 1 2, and then we're entering 3. We're in 3 right now, but within this degree we have a smaller degree of 1 2, and then we are in a wave 3 of 3 right now. And of course, within the smaller degree 3, we just completed 1 and 2. We could potentially be in the middle of a correction, or wave 2 has been completed. If we pull this Fibonacci retracement, right, 61.8, so the golden ratio level. Yeah, golden ratio. It suggests that, you know, on this smaller degree, the retracement is done, especially aligned with the MACD and RSI, right? Counting this 2, it's likely to have been completed, but of course corrective phases can, and they will have longer and more convoluted retracements. So a general thing is just, you know, it's never a good idea to assume that a corrective wave is complete. We always want some kind of confirmation of the completion. So right now, we just wait for a confirmation, just wait for the next move up. Like, as always, check the larger time frame for confluence to see if it has been completed, right? We go back to a daily and just take a look at this. You know, you can just take a look at, you know, these indicators, for example. Okay, it's flipping green, it's possible that's already been completed on top of the golden ratio level of this. Also, you can look at the read the candle. Okay, that's, you know, I forgot what the name of this is called. Doji, I think, some kind of doji. I don't know. I'm quite bad at remembering the names of certain candles. But again, just check the larger time frame for confluence. When we look at the larger time frame, we can see the general movement of where it's gonna go. Like, all in all, what happens in the smaller time frame is not that important compared to the larger time frame, because in the end it's gonna hit this level, right? It's gonna hit whatever level it is, you know, whether it be this, whatever. This parallel channel is actually quite useless, so ignore that. But if we were to do a trend line or a parallel channel, just remember, right, they're really, really strong, and you should never underestimate it. So if we were to do this, you know, bottom, and then go to a 1, we can see, oh, okay, like, unless it's gonna pop off here, it's more likely to be extended past this 1.618. Never underestimate the power of these trend lines and these parallel lines, but also remember that on the bigger scale it's more important. Don't have to worry much about, you know, like 30-minute, right? 30-minute chart, even the hourly chart for crypto, it's honestly a headache. There's like so much movement going on. Trying to track it, unless you have a lot of time, you can, like, by all means do that. But again, if you have a lot of time, you can just save your time by doing a larger degree, right? Just figure it out in a larger degree. The smaller time frames, it'll get there when it gets there, right? So yeah, I rambled on enough. So I hope that you learned something. So please like, share this video, and subscribe, as it means a lot to me. Like, I appreciate all of you watching, and I'll see you guys in the next video.